Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and if you guys are looking for financial education, click subscribe. What I do is I look for undervalued investment opportunities. We talk about basically development as an investor as well, a lot of training slash investing, I'll call it tips, how to become a better investor basically. If that interests you, click subscribe. Today, I want to go over Jack Bogle tips. Jack Bogle he started Vanguard. So he knows a lot about investing. He wanted to create a low expense fee fund. And there's some basically tips or rules that he has for investing. So I'm going to go over those tips. I'll give you my opinion on it. And a lot of them align with kind of what we've learned here on the channel. And we'll see what he thinks. So Jack Bogle, he was a multi-billionaire. This guy knows the markets very well. So I think he's a great person to learn from. So here's Jack Bogle tips. So who is he? Jack Bogle was the founder of Vanguard and a lot of the low-cost funds that they created there. It was because of him. He researched the market and participated in investing. He says to buy the overall market in a low-cost fund and stick the course. That's what and when he means buy, stick the course, like buy the S&P 500, cost average in, and just, that's it. Don't do anything else. Compounding will drive your returns over time. And it will continue to compound, and you'll be very happy that you have done that. And some of you guys should use this as a potential strategy with some of your money. Because he isn't wrong. He is right. It's just I think the stocks are a little bit high right now. So number one, having a loss. So number one, if you have trouble imagining a 20% loss in the stock market, you shouldn't be in stocks. So if a 20% loss bothers you immensely, you shouldn't be in stocks. Number two, here's another tip. Beating the market. Number two, owning the stock market over the long term is a winner's game, but attempting to beat the market is a loser's game. And we are, on this channel, trying to attempt to beat the market. He would advise against us doing that. He would say, go into an S&P 500 index, cost average in, and just hold on for the 30, 40 years that a lot of us have left in investing or more, depending on how old you are. Here's number three, dividends. The true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operating results of his companies. So he likes getting paid large dividends and focusing on the dividend returns and the operating results of the company. Number four, buying performance. Buying funds based purely on their past performance is one of the stupidest things that as an investor can do. And I agree, because what you're doing is you're buying price performance, not value. And that is stupid. It is stupid. I agree with them. Another thing, and this is where I get stuck with Bitcoin. Everyone is buying performance. They are all looking at how much can Bitcoin give me. They are basing it off of past performance and what price predictions there are. And what does he say? Buying funds based purely on their past performance is one of the stupidest things an investor can do, because Bitcoin has no utility. Number five, low costs. Lower costs are the handmaiden of higher returns. And I agree with that. A 1% difference, an expense fee of 1%, just 1%. If you have an 11% return versus a 12% return, costs you hundreds of thousands of dollars, if not millions, compounded over a very long time. Number six, expenses and emotions. The two greatest enemies of the equity fund investor are expenses and emotions. And expenses are taxes as well. That's why I did a recent video on taxes and what accounts there are. And expense fees will eat you up if you're paying very high expense fees, and emotions will kill an investor's return. I completely agree with that. And new investors have to learn how to control your emotions. You do not want to be selling when you think you should sell, and you probably shouldn't buy when you think you should buy. Do not chase performance. You chase value. Value, value, value. And on this channel, I try teaching that. Number 7, simplest. It says, when there are multiple solutions to a problem, choose the simplest one. Number 8, buy it all. Don't look for the needle in the haystack, just buy the haystack. And this goes along with basically my approach to uranium investing. So I identified the undervalued sector, and that sector is uranium. It's one of the sectors, and energy. And what did I do? I spread my money out amongst a whole bunch. I'm not looking for the needle in the haystack. I'm not looking for the best company and trying to guess which one it is. I am buying the entire haystack. I'm buying all of the best companies that have large insider holdings and spreading it across and saying, I got it. I'm betting on a whole bunch of different horses. And the returns are so big that if I just have a couple win, I win huge. Number 9, do nothing. The winning formula for success in investing is owning the entire stock market through an index fund and then doing nothing. Just stay the course. So Jack and I'm going to put myself with Jack, the multi-billionaire who started Vanguard. I agree with all of these. They're all good. And his approach is just to buy the stock market. And I can understand that approach. It is definitely the easiest for everyone on a big picture view to just buy the stock market and cost average in over time. And that is an approach. You guys should look at that as an approach. You can just get some S&P 500, maybe do some emerging markets or something, and then just invest in it. I go a little bit deeper. I do try to not time it on the short term, but the big term picture. I look for undervalued investment opportunities that potentially will pay out from 2, 3, 4, 5 years all the way to 10 years. That's the cycle. You can make incredible returns here with some of the things that I'm going over on this channel. Ratio investing, which is where we're valuing sectors against each other, finding the undervalued sector, and then looking at the companies in that sector for the best investment opportunities. Then I spread the money out in that sector, what I think are the best opportunities in the sector. I might buy 10, 14 stocks in that sector if it's a really good sector and it's very undervalued. And then I create my own ETF. It's a zero cost ETF where I put my money in what I think are the best companies in that sector. And then I hold on. I don't do anything else. I cost average in when I get money. I cost average in when the charts look good. And I just continue to pile in and hold. I do nothing. I don't trade in and out. I know a lot of people when I read in the comment section, they're like, well, what about this news? And what this news? It's all news, guys. It's garbage. Like, you could throw this news up, throw it over there. It could fall on the floor. It just doesn't matter. I don't pay attention to it really. Is the market conditions good? Are the valuations good? If those two are yes, I don't do anything. Does it matter if we have weather that impacts a company for 2 months? No, it doesn't matter. It's a buying opportunity. Buy it. I mean, that's the way I view things. I don't look at things like if a stock's going down, I don't care if it goes down. I don't in the short term. I don't care what even the reason is. And here's another thing. People don't know why a stock goes up and down. They don't know. They just make it up. They literally make it up. The news, they make it up. It's all made up. Now, if there's a huge move based off of some move, like the Federal Reserve raises interest rates and the market tanks, okay, you can attribute that move to that tanking for that short-term duration move. But most of these moves, they have no idea why it's going up and down. And then they just say, oh, the dollar was down, it went up. Oh, this is down, so this went up. And they just make it up. They don't really know. This really hit home one time. I think it was Rick Santelli was on there, and they had a bunch of traders. They're trying to explain why this thing's going up and down, and they interviewed like 5 of the floor traders. Every single one had a different opinion on it. All of them didn't match. They were all completely different, and they all had different reasons of why they were buying and selling the same sector or commodity that they were interviewing. And that's when it hit me. I'm like, these people have no idea why people are buying or selling. We have thousands or millions of transactions occurring, and they're all different reasons. You can't pinpoint it to one reason. It doesn't work like that. So my suggestion is identify the big trend, identify market conditions, and identify value. If you break out of a big downtrend, you have cheap valuations, and the market conditions are pushing you, big tailwind behind us, buy it and hold on. Just hold on. Don't worry about these 20, 30, 40%. I mean, some of these are pretty volatile companies that I'm in. They're going all over the place, but as long as it's above the trend line, just hold on to this bull, man. Don't let it buck you off. Grab tighter. Get the cheetah. Run this thing and hold on. And that's the only way that I know how to make a ton of money. And I mean by a ton of money, over 1,000% return. 10 times your money or more. You're not going to do it in a 6-month period unless you get lucky and you ride some cryptocurrency. That is not the norm in investing. And I don't think that will last. I think 99% of cryptocurrencies will go to literally zero, and you'll be left with just a few. And you know what? When everybody runs out of crypto, I don't know what's going to happen to it. I don't know what's going to happen, because if you don't have utility and there's no need for it, I don't know. My best question for you guys, if you are crypto guys, if you knew the price was not going to go up, that the price was going to remain the same, tell me the reasons below why you would buy Bitcoin. There was zero price appreciation. Zero. Put in the comments section why you would buy Bitcoin and why it is a superior thing in terms of fees, transaction speeds, how the ease of use, and all of these different things. Why is it a superior solution to paying in paper dollars or paying in some other currency or PayPal or whatever it may be? Put in the comments section why it's superior if it had zero price performance. It could not go up. Put in the comment section. Hopefully this you guys like this presentation. Give me a thumbs up. Like you guys viewing this. This is Finding Value.